motherfucker.
Yo, 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 yo. It is February 5th, 2026. All right, let's look at the market. It's bleeding. Let's go. Let's just crash this whole thing. Finally. Finally. All right. Let's see what we got. Let's see what we got here. Looks like it's going to close in a bad spot on NASDAQ. All right, so we're just below 598 on the QQQ NASDAQ 100 ETF. All right, that should be good. That should be good for all the bears looking for a big dump onto Friday. All right, so we'll have earnings on Amazon later. I think today after the close. Okay, so we're all looking at Amazon. There'll be some other ones like Reddit and whatever, but yeah, I think the QQQ is ready to continue on down. We have the SPY, same thing, same looking chart. It's at 678. This area was last tested in January the 20th. All right, and slightly below it at 672 on the SPY, December 17th. This used to be the resistance long candle here and here, these two red areas back in October 9th and again in November 20th, just before Thanksgiving. Okay. All right. So we got those out of the way. Okay. Let's see what else we got. So two shorts today. Using inverse ETFs. So short Palantir again at the open. Right off the bat, right here, we had a 1 hour candle, basically 1 hour and a half candle of about 6.71% from the open, probably 7% if you want to round it up. And then MSTR shorting that one, like we were talking about yesterday. So it tried to struggle holding this area at 121, but within 15 minutes and went down straight down to 108 on MSTR. Okay, so if you use PLTZ, use this one here, 13%, 14, 15%, 18% on Palantir, shorting, and then MSTZ. Let's see. All right. So let's see, somewhere around here, 20%. All right, good. So two 20% trades today off of that. All right. Let's see what else we have for gold. Let's see. So gold mining looks like it dropped, but it's still hanging out above this 91 area. So I just drew this 91 line from here. So I guess it's still in a range, which is, I guess, okay. It's holding up. I mean, silver did pretty bad overnight, and I expected that to drop a lot more, but it didn't. So I'm not going to do anything with GDX, short or long. Okay, so but if you wanted to short it, GDXD, reminder, use GDXD. And then if you wanted to long it, you would GDXU. Okay, right here. So I'm trying to figure out what kind of range the miners want to make on this ETF. Like, do we want to expand the range between 84 and 100, or do you want to keep it tighter in this 91 to 100 area? That's going to be the thing to expect. All right. Okay, guys. Anything else? Nope. Nothing else here. Let me look at, let's see, some other earnings. Okay, let's look at some oil earnings. Okay, so let's look at Shell. I think we had some disappointing earnings from Shell, and so ConocoPhillips kind of did okay, but not enough to overcome the rest of the market. So I think oil kind of recovered a little bit. So it took a hit at the beginning. It's recovering a bit, but with the whole market down, yeah, I think oil itself, crude oil, It's down 1.66%. So yeah, that's not going to help either. But overall, though, oil U is still intact. So you can see it's just down 3% now into the close. So the trend is still there. So from the trend starting from this point here in the day after Christmas, going up until now, so 22 to 34. I'm going to have to see if I want to expand buying this into next week. If the NASDAQ continues to puke and oil futures does not follow anything with the Japanese on Sunday, then we should be good to go. Next week, it'll just be more aggressive buying of oil stocks. So then I'll have to put up the timeline and get some oil stocks to recommend, like oil refineries are probably the ones that have the most sway. So let's look at OEX, oil refiners, and something ETF. I forgot OEX, XOE. Oh, fuck. I don't remember. Okay, let me see. Refineries or service. They call it oil service. OIH. Okay. All right. Let's see. So I'll look at this ETF and see which stocks in here are the most promising. Okay, we'll have to look at that first. And then once we get done with the silver and gold movements, then I'll go back and look at uranium, lithium, platinum, all those other things. All right. So that'll be what I'll be looking at. But yeah, oil service stocks seem to be the way to go initially. I think they're the most strongest right here. So OAIH is touching the top here, 351. All right. Okay. That'll be the one I'll be looking at. Anything else here? Okay. Cement. Okay. So Mexican cement, CX. Okay. CX. So after earnings, it was kind of like down 2-3%, but looks like it recovered a bit. The weekly candle you can see, right? So last week was down 3, and then now down 3.89. So these are probably the largest red candles we've had since October, September here, May, but still not many red candles. And this will be probably the first time you have 2 back-to-back red candles. So I'm going to be eyeing this next week. If we dip and recover and we get back into this range here, then I'll buy. If not, then we're done with this for now. We'll have to wait it out. Mexican ETF EWW seem to be okay. I haven't noticed anything here, but obviously we're at the top of the range at 76. This one's set back in 2013. So it's been a long while since Mexico has been up this high in its stock market. Okay, so this will be something to watch for EWW. All right, SOXX. Looking at this one, the shorts. Yeah, nothing to do here. So I got out yesterday, expecting like probably nothing to happen to SOXX because we've already hit these moving averages here. Okay, on the daily. And so right now we have this low. I guess I'll draw from this line here. Kind of made a low right here yesterday, and then we touched it again today before bouncing. So around 324 on SOXX. So you can see for now, this is probably going to make some kind of range. Zigzag, zigzag, zigzag. But I don't know. After Amazon, maybe it'll start puking again tomorrow. So if the market is bloody right at the open off of Amazon, then yeah, you can short this again. No problem. But I'm concentrating all my firepower on shorting Palantir and MSTR Bitcoin. Okay, so that's where I'm focused on. Right now, yeah, still it's below 108. So earnings for MSTR after the close, I'm going to assume it's going to be bad. There'll probably be some kind of recovery. Bad news usually means you'll excite all the sellers to get out, and they'll be the last of the sellers. There might be some buying tomorrow. If Amazon does good, of course. If Amazon does good, the market will try to recover. That'll be your next time to short it again. All right? Tomorrow when it has a pop. All right, T-Spells. Hey, I haven't seen here so long. Can you tell based off of trends? Scan. Yeah, I mean, let me see. Like, you can do relative strength and all that. Is that what you mean by scan? I don't know. I just, I mean, I have the scanner stuff, but that's some other show. That'll be another show if you want to do that. I'm just doing the easy stuff here, where you're just like, yeah, short Bitcoin, short this shit, short Palantir. Palantir is so easy. It's just like, dude, man, it's so obvious. Those ones are obvious. Let's look at Palantir again. So I've been saying for days now to short Palantir. It's just like, it's just so ripe. You can see this structure here. This was the last major green bar, this weekly green bar. And this sets the tone for the rest of the months here, because you see it gets rejected. You get some support here. You fill it up. You get rejected again on earnings. Red bar here. So you basically say that this resistance at 188 on Palantir is very strong. You try again, get up here, rejected the next week, December 29th. And you slowly fade right into the moving averages, and then after that you're done. So from here down, this is where my target is, 104. So if you short it around 160 something, yeah, you should be targeting 104. So there we go for that. So that's it, guys. And MSTR, who knows? It's just gonna follow Bitcoin, and if Bitcoin just keeps on puking, I guess the next target is 31. So see you at 31 from 106. So if we fail tomorrow and then weekend is more bloody with the Japanese elections, so you have to understand parliamentary elections. So Japan, it depends on how many seats they win. It really does. That's how you decide power over there in parliamentary government. So if the little parties don't get a vote in, they don't have any leverage to the larger majority party, then she can do whatever she wants. Now, is that a good thing for the markets or not? I don't know, right? Some people say it's a good thing that she has more power, because then the markets can understand what's going to happen in the future. If she doesn't get enough seats, all right, and her party is weakened, then it's more confusing. They won't know what the Japanese will do for the rest of the year, and that's going to be worse. So they rather would have her get all the power, even though that's not necessarily good in the short term. Okay, so yeah, I don't know. I don't know how it's going to react. I don't know how the market's going to react. I don't know how the yen and the Japanese bonds are going to react. But again, all those things will have an effect on us, because everybody will shift their money between dollars, gold, silver, everything, right? And this is not going to help what we're seeing right now, because gold and silver already blew up last week, and now we have the tech earnings not delivering, so nobody wants to buy tech anymore apparently. But I warned you that was a eventuality for the past month. So we finally are here, and Amazon's already down 5% before earnings. So what's going to happen like overnight is, I'm guessing somebody's going to buy. So let's say it drops overnight below 212. Somebody's going to buy, pump it back up. And then when the market opens, it'll fail because there's no real buyers. They're just trying to exit out again. And then it's just going to collapse into the weekend. So by the end of Friday, it's probably going to end up like that. So with options, I don't have to start with 25K because they don't have the PDT rule. I don't know about pattern day trading rules. So I don't know. I don't know. And I don't play options. I never encountered that rule. But then I'm not really a real trader like that. I just throw around like 10K here, 10K there, 10K there, 10K there in my cash account in Fidelity. It's not even a real brokerage account. It's just a cash account. And then so I don't even have a margin account. I just have so much cash in that account that that is my margin. And then they change how it settles, right? Before you had to wait T plus 2 days for cash to settle. And then now it's just like T plus 1 day, right? So I do whatever I can do, one round trip trade, and then the next day it's all settled again. I can do it. See, so it's like I don't understand what these I don't care. I don't care. I never. I never had to deal with it. I don't have like a so I don't know what's going on with those things. The only time I would have to worry is if I use up all the money in my cash account, which is like it has to be rare. Like I'm not gonna be using like 8,000, 120,000 in one day. Like I must be insane. Yeah, I must be insane. Yeah, unless a trade is really good. I don't know. I don't think I'll ever see a trade like that. Like something so obvious, you got to do it. Okay, another earnings today is IREN. Okay, IREN Limited. Damn, man. So for all you guys that got in April, $5 to 75. Yeah, interesting. Huh? This one's gonna look real good, huh? For a short, I guess. Somebody's eyeing a short here. If this is a bubble, which which potentially could be popping right now, then yeah, this guy would be a good one to go down. How much of this does Bitcoin mining? I don't even know. So let's see. Iron Bitcoin mining. So how much does it do Bitcoin mining, and how much of it does AI data center servicing? Okay, so it owns and operates data centers powered by 100% renewable energy. Facilities are optimized for Bitcoin mining. Yeah, okay. Yeah, I don't know. All right. This one might be something to look at. Okay, so you guys interested? Shorting something? Short this sucker then. Good luck. Good luck. I bet puts are very expensive right now for this guy. Okay, what's the other one? We got Reddit. Okay, we got Reddit, Roblox. Oh my lord, Reddit's already down 15% and it hasn't had earnings yet. Right at this line too. Oh, so 152. Holy crap. So it's just below 156. I mean, there's not much in this chart for Reddit. It's just like 75, 76, 102, 156, 226, and it's already reversed it since the start of the year, this range. Wow, all right. If you want to short Reddit from 160 to 77, that's possible. I don't know. Maybe it'll bounce tomorrow, right? If you bounce tomorrow, maybe you can, yeah, if you guys want to short it, that's another potential here. Got Roblox report after the earnings. This one's already been a downtrend for a long while, since October, so I don't expect any change. Like, how much further can it go? I guess 60 to 37, but it's already dropped a lot. There should be a sympathy bounce, right? I don't. Yeah. Anytime you have a stock like this going to earnings, like you just need to have, like, what happens usually in this case is like you know there's bad news, but the thing is that bad news isn't bad as what people expect. So you have to remember this is just an expectations game. So everybody knows it's going to be bad, but if it's not as bad as they expected, it will bounce. So you'll have a reflexivity here. So I'm kind of have a feeling like this move from January 20th all the way down here, you'll get a sympathy bounce back up, and then if you want to short it again, maybe. But then again, we'll have to wait for the markets. This one is not easy to call. I think it's been damaged too much for anybody to say. Let's see. And there's not enough chart history right here to make a monthly call here. Like, we're right back to where it, I guess, IPO'd back in 2021. Is this the IPO, huh? Okay, so half the time, or maybe it looks like majority of the time, it was hanging below 60. And then the other part of the time, it was hanging out above 60. Yeah, there's not much history here. Can't make a call. This is just like coin toss. All right, O'Reilly. Let's look at O'Reilly here. I don't know, another red candle for this earnings. So I guess auto parts might be over. Okay, so auto parts, it hasn't made a strong move off of this hugging of the 18-minute chart. Yeah, so that's it. So let's look at Eli Lilly. Okay, nothing. I can't make a call on this one. It's still dancing in this range. Look at the daily one. See? So since November, it's just still in this range. Today is not a good day for it, so we've kind of rejected that. So yesterday was earnings, and it looks like we rejected that. That's not a good look. This will probably have to stay here for a while longer, or finally go down. NVO, so Ozempic, Wegovy, anybody in like doing drugs, diabetes and obesity drugs, you're done with that one. So this is not a good look. This is not a good look. So yeah, terrible. These two are out of the game, I guess, for healthcare stocks. There are better healthcare stocks out there, I'm sure, but those ones are probably done because the healthcare sector is still doing outperforming the S&P. So I think it's fine. All right, momentum. Okay, briefly, we have a high volume here. We got a good week, 26.95%, probably the best earnings we've seen from optical and semiconductors. The other one was Teradyne, still up. Okay, this one's 12% high volume. So those two, TER and LITE, momentum. So those two are still okay. Coherent had earnings. This one is a doji candle. It looks like it's forming in the week. So I have no clue then how we're going to have for the next one. So this one still is a to be determined. But you'll have to watch this one, kind of this and Lumentum and Teradyne. Those will probably tell you when the AI stuff is probably over. Alongside SanDisk, SanDisk is still good. SanDisk is still good. So see that? So even with the blood red of this week, SanDisk is just down 1.2% so far. We're gonna close in 10 minutes in the markets. Yeah. So still okay. Still okay. Yeah. We're still fine. So it was down 16%, but overall, if you zoom out, it's like barely a scratch for SanDisk, which is up like what, 1,000% or something. Yeah, 1,200%. So come on, nobody cares. We're fine. Okay, anything else? Qualcomm died. This one's dead. Almost back to April numbers here. So it sucks. But who cares? ARM helped out. ARM took over, so ARM is up 5 point whatever percent. But still, ARM has been dying off since October anyway. ARM was never a big player in the semiconductors. They got relisted in 2023. ARM used to be an independent stock before they got bought out by SoftBank and then got kind of like put back on the market by SoftBank. So this don't even follow this stock to tell you what it is. Like, yes, are everywhere, but if you're trying to gauge what the heck is going on using ARM to decide how things are going to go, that's the wrong stock to follow. Okay, you got to be watching the memory stocks and some other ones like that. That's it. That's the ones that are leading right now. Okay, Nvidia. What's Nvidia doing? It won't report earnings until much later though. So far this week down 10%. So it's going to go back below to this range here. So 170. So it's still in the 170, 182. All right. Okay. And earnings will be later in February. Yeah. It'll take a long time. Okay. In terms of market timing. Crack, can you do a primer on for complete noobs? Man, there are so many places that will do that for you. Like, what do you mean by complete noobs? That's the problem. Everyone is in a different level. Like, for me, thing is like, the longer you watch me look at charts, the longer you absorb what I'm doing. Okay. So yesterday I kind of emphasized the point about what did I say? Effort versus result, right? And I mentioned a book called Trades Before They Happen or something like that. I forgot, Trades Before They Happen. And I didn't say for you to read that book, but if you were, you can go ahead and read it. The idea from that book was very simple. It's like you look at volume, you look at the bars. What's the effort and what's the result? What's the effort here? There was a lot of effort here. So who won? Who won in this battle? Is it supply or demand? Is it the buyers or the sellers? In this case, we had it go down, and the result after the whole day was completed was right back to the top. So, in this sense, you say, oh, okay, well, there was no result. There was no result with all that effort. So, this is what I'm going to say about that. Now, the next day, however, we got this. We got it going down, 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 down. This was the result. This was the result. Okay. So that's a Thursday and that's a Friday. All right. And so that was last week. So then you go back to this and you wonder, hold on. If the result after 2 days was it going down lower than this bar, which had the highest volume out of all these bars so far, okay? And there was also a kind of second place bar here. So this bar at the had this volume, which was larger than this, okay? So that means this is second place. And then we have at the end of this, actually this is second place, my bad. So these are the two bars here that you should care. And then there's the middle one, the third place one. And so after 2 days of all this work, you end up right here, back in this yellow range. Okay. So you had a lot of volume, and all you got was this at the end of all that work. So ignore all this movement here, up, 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 back to the top. Who cares? It was really easy to push it back down and not only go down below this red bar, but re enter this zone, this yellow area, which was the resistance, okay, that we have set for ourselves after going from here up to here. Okay, that's the result. That's the effort, and that was the result. Now you go look at Monday. Monday, you have even more volume. A lot of result was happening here. You were basically opened lower than this bar, below this zone, and you got all the way up. Okay, but afterwards, you didn't get much further up. So all you completed was we kind of got back into this zone here, out above this yellow one. So we got back into the little cyan one. And then so the next day, what do we get? We got a deep red bar, okay, and we went right back down, almost erasing all of the work put in there. So after 3 days, we've nearly erased all that work. So therefore, there was a lot of effort for very little result. And the end result actually is that you went down. So the result from here to here is actually negative because you did a lot of volume, you did a lot of battling, and all you end up is here. And then the rest of the day, you go down lower and lower and lower and close here. So to me, what does that tell me? Short the shit out of it. And then what happened the next day? Crash. So um, read the book if you want to. So Trades Before They Happen by David Weiss. Okay. I'm going to put a link, I guess. Here, let me get the Amazon link. But you don't need to read it. Like, I basically told you what that book said very shortly. And this is what the Wyckoff analytics guys do. All right, this is what they teach you if you pay for their course. Essentially, I never paid for their course. I just watched like a few videos, and I kind of got the feel of what he was teaching. And I said like, oh, okay, you recommend these books to read. This is what this is how you're teaching. And then from there, I pretty much figured out like, all right, yeah, you can take the course, I suppose, but you want to pay like $1,000? Nah, you don't need that. I just told you exactly what it is. It's just a psychology game. So the most important thing about that book was that you understood how that guy thought. You know, he thought in terms of like, what is the effort you put into fighting over a certain price, and then what is the result? Okay, so trades about to happen. an adaptation of Wyckoff, blah 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 blah. So yeah, so Wyckoff analysis. So you can look at that. So all the basic information is free online. Everything is free. Everything can be gained. The question is how you apply. So one thing I learned about the courses that the guy was going to teach, he basically said this in his first course. So the first course is free. If you want to see how he teaches, it's free. Every quarter they have the first class free. So you can go to the course up and sign up, and then you get a Zoom call and you get in there and you watch the first lecture. Watch the first lecture and you can understand exactly how he's going to teach the rest of the course, because he says he doesn't want to teach you like, oh, look at the like nitty gritty, right? The little like details, like, oh, okay, if I see the moving average do this, if I see it do that, if I see a pattern like a cloud, like a Ichimoku, this blah 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 blah. No, that's not what we're looking at. So he basically says like, I don't want to teach you theories. I want to teach you practice. So most people fail to take what they learn in books and put it into practice. He said, like, this is why most traders never make it very far, because most people spend all their time accumulating what he called knowledge. So they become hoarders of knowledge. Like they want to read everything about trading, right? They'll read about Gant, they'll read about Livermore, they'll read about any kind of book out there about trading, but they'll never become good traders because it's all about psychology. So it's like how you apply yourself to the actual trade, okay, the actual work. So that's more important. And this is something you have to do yourself. Like me telling you, like, oh, if this thing crosses over this is a death cross, right? That's what they teach you all the time. Oh, ooh, it's a death cross. Well, no shit, it's a death cross. But the death cross happened after the actual optimum time to trade. The optimum time to trade was here. But how do you know to short from here? If you shorted from here, okay, you got some of it, but you wanted the big meat, right? The big meat of the short was from here to here, 8%. If I shorted unoptimally and I bought from here to here, I only got 5%. And not only that, this is more dangerous. Usually by the time a death cross appears, you might actually short at the bottom because this thing could bounce right into these moving averages. So this is actually an unoptimal place to short. The percentage that you are correct goes down. This is a better place to short. Okay, now you get it. So I think you understand, like that's why people don't make it in trading, because they go like, oh, death cross, short, short. Yeah, it worked for you this time, but I bet you see another death cross, it doesn't work. So that's why this is stupid. Okay, so the more important thing is to understand where is supply, where is demand. Where is supply, where is demand. Sometimes it'll show up very easily, like here. Sometimes it won't be. Okay, you'll be at a position where the optimum time to short, yeah, was here. This was the when this red candle appeared, you would have shorted right here, somewhere along this red candle. If you zoom in to like uh, during the day, right? That's what will happen. So yeah, that I think that's a good example, like, of what you should do. All right, 35 minutes. Market's closed. Okay, Amazon, do your thing. I have no idea what Amazon's gonna do. Like, look. So where did Amazon close that? Okay, yeah, at the bottom. The worst kind of candle to make, right? Okay, what's another thing we had earnings for yesterday? Snapchat failed. Yeah, that's it. Okay, I think that's enough. I don't know what other companies were more important than those. Oh, yeah. Estee Lauder. Not 20% down. So terrible, 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 terrible. This is the ugliest candle I've seen in a long while. But like if you look at the weekly chart, you see that the trend is still up. Um, hmm. Okay. Well, you know, I might have to look at it. Maybe somebody is willing to buy Estee Lauder at some price down here. So I'll look at it for the rest of the months. And then we have ELF. ELF, oh, disappointing. It had good pre-market. It looked like it was about to do well, and then it does this. This is the worst thing you ever see from earnings, is when you look like you're about to do well, and then you end up at the low of the day like this. And not only that, you're near the bottom of this huge earnings red bar here back in November. Um, this looks like a major short. Major. This whole thing is a topping pattern. This whole thing right here is a topping pattern. This is huge, all the way from 2023, and the range it made between 205 to 51. Like, this thing could crash all the way down to maybe $8 from 76 at this point. With the way it's looking, if it looks like this, yeah, this thing could be a big short, big boy short right here. This is huge. So when you have a large base, you would call this a base, right? You would say higher the space. So if you're going up, you have a large base, you're going up high. But in this case, we have a large base, we're going to go down. So this thing is going down right into like 5 miles into the earth or something. Maybe it'll drill straight to the earth's core. I don't know. This thing is horrific looking right now. This is not what you want to see. All right. So that's an example right there of a chart that you could say, like, short this one, short this. And when you have makeup stocks acting badly like this, this means white women aren't paying, or their simps aren't paying, and white women basically lead the economy. So looking at what white women consume, or what they make their boyfriends pay for, drives a lot of the economy. And when you start seeing these type of stocks fail, it's a leading indicator to the economy ahead. So if I start seeing more and more of this, like Lululemon and all this stuff, fail like this, then in a year time we should have a recession. Okay, so these are things you don't want to see. Anything else? SMCI. Hmm. It tried to do good, but it already, yeah, it went up on earnings, but then the next day, yeah, today just gave it all back. So that's not a good sign either. AMD is still down, right? Yeah. So, oh man, disgusting. That looks ugly. I think the only two things that look like kind of okay right now, outside of Teradyne and Lumentum, like I mentioned, is Merck and Pfizer. So at least we have two healthcare stocks that look okay. So MRK and PHE. So let me look at the monthly chart for you. See, it's been doing well since the summer. So after this drop from March, April to, so you kind of look at it, it's kind of funny, right? Like, this stock is going inverse to the rest of tech. So tech was going up, and most of the S&P was going up, right? And this guy was going inverse. And then we topped out in October, kind of, and then this thing is going up. So when you see like healthcare stocks like this, a big pharmaceutical like this, do that, then that's not a good sign, I think, for this overall stock market. Pfizer, let's see, making a base. Looks like it's kind of recovering. So ever since COVID, it's been hanging down here. Yeah, maybe it's time to get back into Pfizer. Maybe it's time. Kind of like Moderna. Same thing. I've been mentioning Moderna a little bit. It's done well. It's kind of made this base here, and it's breaking out of it. Now, does that mean it's going to go back up to the COVID highs? No, 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 no. But you could probably trade it up, like if the market really is not going to go well in a few months, then you could probably can hide out here. You can put your long-term portfolio somewhere. Might as well put it in Moderna and Pfizer, and Merck, hide out there for a bit. There are other places to hide out too. I don't know if Caterpillar is going to be one of those places. Could be. Caterpillar could be a good place to chill too. So if you're looking for boomer stocks, those are the ones to get. If you're a boomer yourself or whatever, that's the place to hide out in for the next half a year, 2 quarters probably. It's not going to be Disney, I don't think. Disney, yeah, we already looked at that chart. Okay, the worst earnings I've seen this week has been PayPal. PayPal was horrible. Look at that. God damn, 24% this week. Oh my god. So it's 39, right back to where the 2015 level. PayPal's dead, man. What is it? Is it going bankrupt or something? I don't know. I haven't been following the news. Think PLTR and MSTR will continue dump? Yeah, I think so. Um, I sold some that I started again today, but I kept some for tomorrow. If Amazon saves the market a little bit in Friday, I'm just gonna buy back at the open. So yeah, once women stop shopping, that's the problem. Yep, yep. Oh boy, this is crazy, right? Wow, this is nuts. This is the worst thing I've seen ever. This PayPal thing. Oh my god, I never see. What happened? Man, it's huge volume. How much volume is that? 263 million so far this week. When was the last time was like here in 2022? Holy crap, man. Wonder if that says something about the economy too. Yeah, this the payment processing side of things might be a leading indicator. Hmm. Okay. All right. Anything else? Nope. 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 Silver and gold. No, I don't think I'm going to talk about that. Who cares? I mean, you guys already know silver went down 15%. I don't give a shit about that. Who cares? Okay. Let's see. So let me play this video. Since we're talking about psychology, I might as well get to it for the last 15 minutes here, and then I'll check if Amazon released its earnings yet, and then I'll give you a last moment advice for tomorrow, maybe. So let me play this.
You know what's strange? We talk endlessly about boomers and millennials. We dissect Gen Z like they're some kind of fascinating new species. But there's this entire generation that just exists in the middle.
Okay, so we're going to talk about Gen Xers, okay? So I don't know if I'm going to get copyright for playing this, so I'm going to lower the volume, all right? I basically screen capped it with the uh, caption, so I'm just going to talk over his voice. So let me like put his volume at ultra low. I don't know, the AI could still catch it. If the copyright system is sophisticated, even if I lower the volume and I talk over it, maybe it'll just catch over it.
Barely mentioned,
Barely
almost
mentioned,
invisible.
almost invisible.
Generation X.
So we are the almost invisible generation. I am a very old millennial, very young Gen Xer. I'm right in between. Okay, I was born, so I have a foot in both sides.
Born roughly between
Born roughly
1965 and
between
1980, they're your
1965 and
older
1980.
coworkers who never complain, your
Okay,
parents who seem oddly
okay.
detached sometimes.
All right. So let me go back a bit. So this is like you basically have a generation here of what they call latchkey kids. All right. So this really describes me. So let's go back a bit. So you have born roughly between 1965 and 1980, all right? They're your older coworkers who never complain, your parents who seem oddly detached sometimes, the people who built the internet but don't post about their breakfast. And here's what nobody tells you. Their psychology is probably the most misunderstood of any living generation. They were the first generation of latchkey kids on a massive scale. Picture this, it's 1978. You're 8 years old, and you come home to an empty house because both your parents are working. No smartphone, no ring cameras, no way for anyone to check if you're okay. You let yourself in, make yourself a snack, do your homework alone, and wait. A study published in the American Journal of Orthopsychiatry found that by 1984, approximately 7 million children between ages 5 and 13 were regularly unsupervised after school. That's an entire generation learning that you can't always count on someone being there. That empty house did more than make them self reliant. It drilled in the idea that actions have real consequences, ones you can't talk your way out of. When their parents finally showed up, you always knew where you stood. The rules hit hard and fast. Nobody cared about how you felt or wanted to talk about it. Step out of line, and you paid for it right then and there. Psychologically, this created what researchers call a high contingency environment, where actions and outcomes were directly linked without buffer time. Okay, your brain learned to predict consequences in real time, which is why Gen X tends to think 3 steps ahead in ways that baffle younger generations. Gen X grew up watching their parents talk a big game about stability, then turn around and rack up divorce rates through the 70s and 80s. They saw people give their all to companies only to get pink slips when the next round of layoffs hit. Everyone told them, work hard, follow the rules, and life will work out. But then the rules just changed right in front of them. So, yeah, psychologists might call it defensive pessimism, but Gen X, they just call it being realistic. It's not that they're cynical exactly, it's more like they built up this emotional armor. They cross their fingers for good things, but deep down, they expect the rug to get pulled out. Because honestly, that's what kept happening. And that's a big reason you barely hear them on social media. They grew up in a time when privacy was just normal. When you messed up as a kid, maybe a handful of people knew, and that was that. No phones, no viral videos, just some awkward memories in a basement or a parking lot. Okay, so I think yeah, that explains a lot of my philosophy and probably like how I view like investing, trading, and all that stuff. I think I will send this over to Universal Jones. I think it'll be good if Universal Jones does some kind of like work on what exactly is the psychology of a good trader, a good investor, a basically a good essentially a successful person in making money. A successful person in making money is completely different from a successful person being a physicist, nuclear engineer, a construction worker, like an architect, like anything like that. I think there was I saw a presentation I remember some way back when. I don't know if I screenshotted the slide, but there was a whole correlation of like who made the best trader. I remember that doctors made the worst traders. So if you're a medical doctor, you are the worst trader. You will probably be the worst trader because the way you looked at things and how to solve things as a doctor goes against everything you should do as a stock market, commodities, whatever, crypto, any kind of trader, financial trader. So yeah, there's something interesting about that. So and probably some of this Gen X shit, like definitely affects me, and how I look at stuff and how I look at the stuff here. So yeah, the link is in the description. You can watch the rest of this video yourself on YouTube. So this was a good video, I think, and I don't know. I'll probably play some more of it some other time if I think, but I don't want to get the copyright stuff. Okay, so I'm not sure if that the algo will catch some of that, and it'll be like, oh yeah, because yeah, YouTube algo is very sensitive to the copyright. But of course, we're not monetized, so I don't know. Maybe it will skip over it anyway. Currently, that's it. And but one thing that I have some older like friends who are definitely inside the Gen X camp. So they would see stuff like this, like in their classes during the Cold War. So
And cover. Be sure and remember what Bert the Turtle just did, friends, because every one of us must remember to do the same thing. That's what this film is all about. Duck and cover. Paul and Patty know this. No matter where they go or what they do, they always try to remember what to do if the atom bomb explodes right then. It's a bomb. Duck and cover. Sundays, holidays, vacation time, we must be ready every day, all the time, to do the right thing if the atomic bomb explodes. Duck and cover. That's the first thing to do. Duck and cover. First, you duck. And then you cover. You duck and cover tight. Duck and cover under the table. It's a bomb. Duck and cover.
He did what we all must learn to do. You and you and you and you. Duck and cover.
All right, Timmy. Yeah, if we get nuked, yeah, you better duck and cover, guys. Yeah, sure, we're gonna get nuked. All right, we're gonna get Pearl Harbored by Japan on Sunday. I'm pretty sure. So that's what I'm gonna be waiting on. All right. I think I might have some other stuff for you, like a couple things before we close out the hour. Let me see here. I am going to show a couple tweets. Let me get the tweets up, and then we'll end the show. So very quick show today, just going over the plan and strategy. So everything's working out fine. Okay, long oil U, short semiconductors, short Palantir, short MSTR, gold and silver unknown. It's in a range, so that makes it hard for me to figure out if it's worth it to deal with guessing which day it's going to go up, which day it's going to go down, right? That's the problem with those things. You want to look for trends. And right now, Bitcoin is in a downtrend. Palantir, downtrend, starting a downtrend, or maybe you would say it's in the middle of one. It depends on your point of view. And oil is going up in a uptrend. Okay, so that's basically where we're at. And okay, let me find the two tweets I want to look at. I thought it was kind of funny. You saw these tweets after you see that duck and cover thing. Yeah, let me show you this. Duck and cover, duck and cover, duck and cover, duck and cover. Well, how about this for duck and cover? Larry Fink, the what is it? The CEO? Is he the CEO? Yeah, I think he's CEO of. Man, why is Twitter always slow for me? Man, is it trying to load some cookies or something? F that. All right, BlackRock CEO Larry Fink says markets will rise and fall, bubbles come and go. The only thing that matters is staying invested through every cycle. Hell nah. If the cycle is changing, I'm moving my money around. All right. So last year was all about semiconductors, right? Now this year is about oil. I'm not staying invested in semiconductors if I can just push my money into oil. Okay. So this is what we're going to try to do when I do my Substack. We are going to make model portfolios. We're going to make portfolios that adjust themselves maybe every month to, or maybe twice a quarter, 2 times a quarter. I don't know. I haven't decided yet, but we're going to try some games here. We're going to say can I beat the S&P 500 using a few ETFs, some stocks? So no options, no nothing crazy. Okay, just and no leverage ETFs. Just basically just picking, just stock picking. And if I can beat the S&P 500, then I'm gonna test out my quote unquote algorithms to see if it works. And then I'm going to train AI to do the same thing, right? And then we're going to improve on that. If we can take what we learned from there and go into make a bot to do this work, then this is how you start a company. Okay. And I'm giving it away for free. All right. I'm going to let you guys figure it out. Once I start the ball rolling, you guys take over and have fun with it. Because I think with the whole AI stuff, eventually, you guys want to do this on your own. You don't want to be stuck in a position where AI takes over all this work and then you have to pay some money manager to do this, and the money manager won't be humans anymore. They'll just be AI. So essentially, you just pay the computer to do it, and all that money is going straight into some guy's pockets whose name is Larry Fink. So that's who you're competing against at the end of the day. Now we have another thing here. Okay, let's see. This one looked more interesting. Let me see. Okay, let me load up. Okay. Okay. Home buyers and sellers are both backing off. Estimated number of US home buyers and sellers actively in the markets. So right now we have a lot more sellers than buyers, by 530,000, the largest gap ever recorded. Really? Well, does that mean something? Okay, I said like I'm really interested in Fannie Mae and Freddie Mac. If interest rates are gonna go down, okay, this gap should close. We should start seeing a lot more buyers come in. So I think people are going to notice this, and there's going to be a snapback. All right. Somebody wants to juice up the housing market. So I think after our AI stuff, people are just going to try to jump ship and go somewhere else. They'll probably try to hide out in real estate for a little while. And then eventually that'll come to bite them in the ass because that'll probably start a little mini bubble going into 2028. Okay, so something's going to happen in 2027, but then the real estate cycle, the 18.5 cycle, will start closing very shortly in the coming 4 years. So starting in 2026, 2027, 2028, 2029. So we'll have a 4-year bear market in real estate starting now. Okay, but you won't see it yet, right? So there are 4 years. So sometime between now and 4 years after, right? So we're going into what, 2030. Watch for a top in the real estate market, and I think we have to pump it up first some more. So this chart kind of tells me that, like, yeah, we're due for a lot of housing buyers to move back in. They're definitely waiting for the interest rates to go down, so they definitely will. So they're on the sidelines right now, and it'll be nice to sell a lot of housing stock to people. So we're gonna have to get that through. I think that's gonna happen. Let's see. So that's from Redfin. I don't know. Can you trust Redfin though? Maybe it doesn't work. Who cares? All right, guys. Let's see. Let's see what people are saying about Amazon earnings. I'm sure it's already out, right? Twitter is probably lighting up like crazy. Who knows? It's already like almost 30 minutes. Come on. Let's see. Nancy Pelosi, blah blah blah. Who cares? Come on. Oh man, that was like what? Oh, give me the latest. Who cares about the top stuff, man? Okay, Amazon with Q4 2025 earnings release. How'd they do? Positives, revenue, 14% year-over-year growth, 24% year-over-year growth for AWS. So that's their cloud AI stuff. Operating income, 25 billion year-over-year. Up, okay, and scaling annual revenue run rate, 700 billion. But what about the spending? What about spending? So that's good, right? So what, 200 billion spend CapEx guide? So is that good news or bad news? They want to spend. Stock reaction down 7%. Okay, fine. So I guess the stock market doesn't like that. Great. I thought you guys liked AI. Don't you want to see them spend more money on AI? What's wrong with you? See, that's why the stock market, who knows what it wants? It doesn't know what it wants. What's your favorite site for market news? I don't have a favorite site for market news. I don't look at the news. I don't care about the news. I just look at the charts. Once you do charts so much, like you barely look at the news. That's why I was asking, what happened to PayPal? I was like, look at that candle this week. What's going on? It's like, but the chart was already dying, right? You would have known that PayPal was a bad company. But right now we're right back to 2015 levels or something, and that's really kind of like saying to me, is the economy bad? Because if PayPal is a major payment processor, why is it doing so badly? I mean, Visa and MasterCard are okay. I think American Express already had earnings. It's doing all right. So maybe it's just a PayPal thing. Cash App is taking over, right? Cash App. Goodbye, PayPal. It's all about Cash App. Let's see. But if you really wanted some news aggregate, like a news aggregating website, I would use a Seeking Alpha News. Okay, so you can go Seeking Alpha, but then you have to register now, so you got to like put in your Google login or something and then do that. But generally, I don't. Okay. Market is crashing. Yeah, thanks a lot, buddy. Yeah, of course it's crashing. It's been crashing. Jeez. After hours down 9%. Well, this is not looking good. Okay. Oh boy. I guess we're gonna get ready for a bloody Friday again, if it doesn't recover overnight. So tomorrow morning, I recommend you continue shorting MSTR using MSTZ. Okay, and then also Palantir. All right, I'm sure Palantir is gonna puke again. So PLTR. None of those stocks can hold their liquor pretty soon. Now, SOXS, so shorting semiconductors, yes, put that on alert. And you could probably get a day trade off of that. Now, the problem is the fact that would you hold it over the weekend hoping that Japan would make things worse for a Black Monday? If you're hoping for a Black Monday, I don't know. That's really up to you. That's really a personal thing. I don't like holding positions like that over the weekend. Like any kind of short positions or leverage ETF, unless a trend is really good, I don't like to hold it. I'm not going to hold it over a weekend. That's too many days of news. Like Trump always does something over the weekend. And then you have Japan too. That's just like you're asking for trouble. You could have a big bounce. I wonder if the Epstein stuff has anything to do with. Yeah, sure. I'm sure the Epstein stuff probably does. Epstein's always going to have something to do with it. Yeah, what's up, HB? Yeah, sure. Like the more stuff they reveal. I mean, did you see the stuff I mentioned yesterday? You know, with the Goyim, with Asmongold. We cornered the shipping futures. Yeah, we put some puts and calls on those shipping lanes, buddy. Shipping lanes. All right. If you've got those shipping lanes locked in, man, you're screwed. So they're laughing at the Goyim, and they're probably laughing right now. Here's another tweet. So since you brought that up with the Epstein, I'll mention this tweet, and then I'll go. Yeah, T Spells and HB. Yeah, I'll be streaming here. Yeah, I'll be streaming here on this channel here, and as well as my own channels. Okay. So give crack to me and on Kick too. So if YouTube takes me out for saying this stuff, I'll be on Kick. So I always multi-stream on there. So this is from Autism Capital. And let me play the X-Files background music for this one. Okay. Yeah, sub to HB's channel because like he got struck, I think, a month ago. So this is his new channel, HB2N Nation. Okay. Nation spelled correctly, I believe. Nation. And yeah, so let me get that. I got clipped. You got what? Man, YouTube is very sensitive now. You got to be very careful. And if you got a bunch of haters coming at you and reporting you, so the AI will ding you, right? So there's a score. You have a credit score in the Google. Google gives you a credit score, and you can notice it from chatting too. If you make too many bad chats, they'll start shadow banning you because you won't be seen on top chat and might not even be seen on top chat if you go way too hard. So they'll ban you that way on the comment sections and everything like that too. So you got to have a good credit score now in the Google system. I don't like, so that's why I'm not going to chat too much, or if at all, on YouTube. I mean, it's not worth it anymore. If you can't have free speech and you're going to give me a social credit score, I don't want all my Google accounts to disappear, right? I got old crap from school that I want to just keep as a Google account. I don't have time to be downloading every old email I had from way back when and moving it over somewhere else. So Fuck that. So if that means I'm not going to chat or comment much or if at all on YouTube, then so be it. I'm going to be on Kick. So if you stream on Kick, multi-stream, go chat in my Kick chat. Don't chat in my YouTube chat, because anything you chat in YouTube, you know, how they'll count how many times you mention Epstein, HB. If you say Epstein too many times, you're going to be kicked out again. Yeah, I have a lot of haters. That's what you get. That's what you get for hating. Hate. Everyone loves to hate. That's exactly why I came on the internet. You think I came on the internet for love? Hell nah. I came here for hate. All right, let's play the X-Files theme here. This has to be one of the craziest emails from the. I found criteria to find smart people. The more Jew you are, the smarter you. You said you're 98% Jew. You're very smart. My ex-boss is 78% Jew. He is super smart. Less smart than you are. I have a close friend, business partner, who is 99.3% Jew. He is crazily smart. We take all Jewish people. Sourcing can be done through relatives. Ask them to do 23andMe. Do event for everyone. You know, this is what I hate about these Epstein emails. Nobody proofreads. It's like, okay, I can handle like a few errors here and there, but I can barely read this shit. There's missing words. The syntax is all wrong sometimes. Fucking shit. Oh, man, whatever. Anyway, do it for everyone who's 98% Jew. Also, all of them are not religious. Yeah, great. Yeah, anyway, so enjoy, guys. Enjoy the Epstein leaks. So, yeah, like, do your 23andMe. Maybe you got some Jew in you. That'll determine how smart you are, baby. Yeah, that's why I think it's kind of all fake. Yeah, I don't know. Why in all these documents no insider trading? Yeah, well, the only mention of any kind of trading at all was the futures in the shipping lanes, the Baltic dry shipping, which is very like something that most people would never know about. You know, this is very kind of like that, but I don't know. Yeah, it's all probably gaslighting anyway. Like all the real good shit is probably still hidden, right? This is all just the dumb shit. This is like whatever, dude. Yeah. It's just funny though. But as going back to the whole latchkey kid stuff, like, so I had two best friends who were latchkey kids, and you know, we were very close from middle school into high school, and one of them, yeah, was a Jew. So he was a very awkward kid, you know, very awkward, very uncoordinated. He couldn't do any sports. He couldn't do anything, you know, to save his life, catch a ball or do anything. But you know, I was basically his only friend. And you know, he taught me a lot about computers and the stock market. So I have to thank him. You know, I am where I am because of a Jew. Okay, so even if you're not genetically Jewish, you can at least be a friend with one Jew who can help you out. So, so what's this? Israeli novella? What the fuck is that? What's an Israeli novella? Oh man, is this a new genre? Is this a new genre we're making? Israeli novella? Is this the? Okay, guys. I'll see you on Bloody Friday. I don't know if it's gonna be Bloody Monday or not, but I'll see you then. Okay. We love the small hats. Yes, Jews rock. Jews rock. We love the small hats. Yeah, Epstein. Yeah, this is really. I get what you're saying. Yeah, it's really novella. I'm just trying to say like what? So is this the new job? Are we gonna make a? Actually, there's AI. They were making AI like Epstein like little movies. You know, little mini movies or something on there. Maybe I'll play them next time. Yeah. Okay, so I'll see you. See you around T-Spells, Tropes, Eric W, HB2N. All right, we'll see you in the next round of market horrors. So we only have 1 more Magnificent Seven stock left for earnings. Okay, remember that. Nvidia in what, 3 weeks. 3 weeks. Very long time, right? So that's it, dude. We already know what's up with earnings. If Amazon is going down, lights out.